Hey guys, good morning. It is Wednesday, January 11th at about 8:49 a.m. right now. So there wasn't a post yesterday. So at one of our facilities, at the manufacturing facility, we had equipment go down. So we were there early morning talking to Germany, trying to get it back up and running. Knock on wood, it seems to be working now. No real problems, but it really just took the whole day from me. So really quick, I'm going to have a little bit of a jumbo episode. I'm going to try to cover all the stories I wanted to talk about yesterday, as well as today's stories. So the biggest story of the day is definitely FAA. So if you haven't heard, FAA had grounded all domestic flights here up until 9 a.m. Eastern time. So they should be flying now, but it's definitely going to impact today's travels across the U.S. They had an outage with their software system where they weren't able to communicate with any pilots. So because of that, they had to ground all flights. It's definitely going to impact first quarter results for all airlines because not only is it a single day outage, this stuff usually trickles down and affects multiple days. So we'll see what happens as far as their quarterly results, probably sometime in like April. That is kind of a minor story. The big story I really want to get to is Jerome Powell. So yesterday, Jerome Powell had a speech that he gave in Europe, and he didn't really talk about interest rates. He didn't really necessarily talk about economy directly. Everyone was obviously looking at signals for interest rates, where they're going, what he's going to do. I think he's going to raise. Everything he has set up to this point signals that raises will come. We just don't know the amount, right? We don't know if he's going up by a quarter basis point, half a basis point, 3/4 of a basis point. But what he really talked about was ESG, and I think that's very, very interesting. So by now, everybody probably knows what ESG is. It's environmental, social governance. It's pretty much woke culture influencing finance. There's no pretty way to put it. It's trying to prioritize social and environmental issues into business, which is great and all, but it actually is kind of terrible because it doesn't look at true financials. It actually looks at optics more than anything else. Like Lockheed Martin, the company that makes the Hellfire missile, has a better ESG score than Tesla. Regardless of what you think of Elon Musk, it does not make any sense that the company that makes Hellfire missiles has a better ESG score than the company that makes electric cars. Electric cars aren't necessarily better for the environment, but the public perception is they are. That's where the economy is headed. And that's just a ridiculous statement that a missile manufacturer has better ESG than Tesla. So what he talked about wasn't necessarily ESG specifically, but on climate. So he talked about how the Fed was not going to be a climate regulator. They were not going to let climate issues come into effect of regulating the market. And I think that's awesome. I am not the biggest fan of Jerome Powell. I think he's okay. I think he was way too dovish on raising interest rates at the beginning and now might be too hawkish. So he should have seen these problems coming, saying things like inflation is transitory or that we won't have inflation when inflation was already occurring well into 2020. The indicators were all there. He has access to more data than I do. And the fact that he didn't see it coming or didn't want to see it coming or just allowed optics to play a role is pretty shameful. He's no Paul Volcker. He will never be Paul Volcker. But this at least shows that he is taking a stand on an issue and that he is not going to become an environmental regulator. I think that's incredibly important. The other part of this story that's very interesting is obviously we've heard of ESG being a factor on Wall Street. The fact that it's to a point where even the Fed chair has to sit down and say, we're not going to do this, really shows you how pervasive this is and how dangerous this is. ESG should not play any part in business, period. Much less the national monetary policy of the United States. It is absolutely ridiculous that the monetary policy of the United States not be based on data, but be based on social optics. That is outlandish, and I'm really glad that he took that stand, and I think everybody should be very happy. Anyone that understands anything about business or can do basic math should know ESG should not play a role at all in business. That's kind of my little rant on that, but it seems like a minor story because it was just a blip, but it's kind of a big issue, and I think it's very important to talk about. Let's get to crypto real quick. A lot of stuff still happening with crypto. Crypto, I think, has seen the best of its days in the past. Coinbase is cutting its workforce by 20%. At the same time, Coinbase has been ordered by the state of New York to pay $100 million in financial costs. So apparently the allegation is that they weren't vetting their clients well enough. They weren't monitoring their transactions. There could have been money laundering. There could have been black market activities in there. So they're being forced to pay $100 million to the state of New York. Again, a story that didn't make much traction, but is very impactful. I think it's going to be continuing in the crypto market, that we're going to see more and more scandals, more and more issues as this stuff comes to light, because I think a lot of times crypto for the last 10-15 years has kind of been a shadow market, even when it's establishment based, and I think those days are behind it. I don't know if it's going to survive, but if it is going to survive, it's going to be in a much more tightly regulated market than it's been before. Strangely enough, Binance is going to be hiring additional staff. So that's very interesting, as a lot of these other exchanges are going down. Binance is actually going up. So they're claiming they're going to be hiring 15 to 30% more staff in the next year. That's a pretty large investment. I don't know what that's actually going to entail, if that's just a press release, and we'll see how much they actually hire, because it's a great press release. It makes people think that the company is very solvent, especially since there's been a lot of criticism of Binance's relationships with FTX. So they could have just released this press release to save face, to show stability in the market when everything else in the crypto market is showing instability, and then only end up hiring maybe 1,000 or 2,000 people, or a few hundred people actually, maybe a few staff here and there, and just say that the economy took a turn for the worse that they weren't anticipating. Honestly, I think that's the direction they're going to take. Use this as a press release, but then not actually implement any of it. Let's see. Interestingly enough, gold is up again. So this is something I touched on yesterday. Gold is often a leading indicator of instability in the market or a coming crash. Gold went up again. It hit 1887 yesterday. It closed, I think, about 1882, and it was up again this morning. So that is something to keep watching. Like I always say, keep watching gold, because I think that's always a big indicator. It was a big indicator in 2008. It was a big indicator in 2020, and it's going to continue being a very big indicator in the coming months. Interesting thing is 46% of Americans now have more credit card debt than they did at this point last year. Last year, they had 39%. At this point, they have 46%. That could be a bad sign. I'm not as hawkish on debt as some people. I think more credit card debt also means more spending. So it's really delinquencies that we have to be looking for. I wasn't able to find any data that shows Americans are more delinquent on credit card debt than they have been in the past. It's just that credit card debt is up. Obviously, a lot of people start creating narratives of, well, when people don't have money in the bank account, they start spending more on using their credit card. That's not necessarily the case. I book travel with my credit card. I do large purchases with my credit card for multiple reasons, the security factor of it, and also the rewards points on it. So the fact that Americans are using credit cards more doesn't necessarily mean that they're spending on incorrect things, or that they're being strangled by costs. It could just mean that they're making larger purchases. For example, my girlfriend, she just moved cross country to me here in Utah. She used her credit card on every single transaction, from her pod to the movers to everything she needed for her new apartment, furniture, groceries, utensils, you name it. She bought that all on a credit card. Massive costs, but it's all investment because she's starting a new life here in Utah. So it's not necessarily that simple to say, well, credit card debt is going up, that means the economy is doing bad, that means consumers are struggling. It could just mean they're spending on bigger ticket items. Other stuff to talk about. I did forget to mention with Coinbase, another issue with in the crypto market, Bank of America has actually downgraded Coinbase as well. They're saying that the outlook on crypto does not look good, so it's not really surprising. It's a lot of the stuff we've already talked about. Let's see, Kuwait is likely to 5x the amount of imports they do to Europe. So Kuwait is planning to ramp up oil production. Oil is already down. I think that price is going to remain fairly stable. Obviously, production is going to rise, but I think production is going to rise because so much oil that was already in the market was going to exhaust itself. So the Kuwait raising its rates is really just going to be there to maintain current prices, right? Russia isn't selling into the market. There was already supply in the market. It's dwindling, so companies have to ramp up. It's not to their advantage to overproduce and drive prices down, because then it's not worth pumping and drilling. So I think we're going to stay at a very stable price, but I think that global oil supply isn't going to drop by as much as people think. I think a lot of these countries are going to ramp up, take advantage of the vacancy that Russia is taking, maintain current prices, but I don't think the coming oil apocalypse is coming. Let's see, what else do we have here? Bank of America, Binance we already talked about. Goldman, another interesting layoff. Goldman is planning to lay off 3,200 staff. It's one of many other companies that has kind of continued staffing cuts. We'll see what that entails. So far, it's not really impacting unemployment, right? Besides the fact that we're seeing all these layoffs, unemployment is not going up. Reopening in China is continuing. Australia is expecting that its GDP is going to rise by 1% this year because of that reopening. For those that don't know, Australia is heavily tied to production and GDP of China. They are one of their strongest trading partners. There's a lot of migration between the two countries, so it's not surprising that Australia is going to benefit from the reopening. That's pretty much everything I wanted to cover. So this episode didn't end up as large as I thought it would. I actually do have to get back to work because it is still a pretty busy week. I will try to get better with these posts. I'll hopefully be back in my bathrobe tomorrow doing another post from my house before I go to work. It's just the last couple weeks have been pretty busy. Hope you guys set amazing goals. Hope you reach your goals, and I'll see you guys tomorrow.